going to be presenting is a working paper that I have with some of my colleagues. And this is looking at sustainability reporting practices of SMEs and what is their journey towards the net zero emission. So I would like to start by providing a bit of a context to this research so that you understand where this is coming from. We all are aware that sustainability reporting, climate change, global warming, these have been issues that we have had for a very long time now. And recently, or I should say in the last 5 to 10 years, these issues have picked up quite considerable momentum, and there are lots of countries that are taking action in regards to that. And starting off, as you would be aware about the COP, different COP activities that have happened over the years, COP21, which happened in Paris, was one of the milestone where the 197 countries came together to sign agreement that they are going to work towards reducing the effects on climate change. And as a result, we have seen different measures being taken place. So back in India, if I relate it to your example, you would be aware that there are different movements and groups that have been taking part in such initiatives as well. And recently, you would be very much aware than me that Sadhguru from Isha Foundation has taken the pledge to create awareness about the soil Save Our Soil, and he is starting this campaign to go around 27 countries, talking with the governments and asking them to look at the soil policies and look at measures to implement soil revitalization. So there is a lot going on in this front, and you would see that this is quite a complex issue that needs serious attention of all. In regards to the COP21 that I mentioned, one of the outcomes of that was different countries had taken the pledge to reduce carbon. And UK was one of the countries that had said, or has later on come down to say, we are going to reduce carbon by, or have net zero carbon by 2050. China, Australia, Canada, few other countries have taken the pledge to reduce their carbon by, or come to net zero target, I should say, by 2060. India, in that sense, has also taken the net zero pledge for 2070. So you will see that there are lots of actions being taken in this regard. So you might wonder, what is this net zero I'm talking about if you have not been following this debate? Net zero simply means there are measures that are taken to reduce emission. And this would be in forms of investing in green technology, such as investing in solar panels, putting in windmills and so forth, that we are able to use sun, wind to generate our own energy. Also, simultaneously, there are measures to remove emission. And this would mean, as we all know, by planting more trees and by expanding forests that we have and saving our forests, not cutting down trees. So by doing this, at the same time, you would be able to balance out the amount of carbon emissions that we are producing, or the greenhouse gases that we are producing, and we would be able to balance it out. So the UK's net zero emission policy literally is saying that we need to ensure that whatever our practices are, we are able to have very, very low carbon and basically reduce it to zero by 2050. It sounds like a very long way, 2050, but we need to have measures in place to ensure we get there if this has to eventuate. And what this means is that the government alone cannot just achieve this, or investors or designers or manufacturers. Nobody alone can achieve this. This has to be done in collaboration with different sectors that we have. It needs everybody's help and support to make this happen, make this a reality. And this requires immediate action and also deep cross-sector collaboration. So as I said, government alone can't achieve this. They need to work with the investors, designers, manufacturers, NGOs, public at large, so that we all are doing our bits to contribute towards this zero carbon target. And in a very simplistic way, we could say that net zero, if we were to achieve this by 2050, would look something like this. We are able to have our own production of green energy, and that is used for our consumption. And, you know, the gases are in balance, the emissions are in balance here. So what are the measures? Because if you talk to someone, they'll say, oh yeah, it's 2050. I don't even know if I live that far ahead in time, so why should I worry? But to make this more realistic, what government is doing actively now is trying to put in measures to reduce emissions and have interim steps. So one of the interim steps that they have put in, or the interim target they have put in, is to reduce our emission by at least half, or 45%, in the next 8 years. So by 2030, they want to reduce emission by at least half. Also, they have introduced laws or put in policies that by 2030, all vehicles that will be sold in UK, all new vehicles, are going to be electric vehicles. So they are not going to be selling any new vehicles that are run by petrol and diesel from 2030. So everything has to be switched from electric mode. Also, they are putting in measures so that houses, businesses are engaging in green energy. So as I said, this may seem like a very simple problem, that we can just be environmentally friendly and just do, you know, little bits of recycling and reduce our wastage, and we should be there. But it is far more complicated than that if we want this to really happen and make a profound change. So some of the guidelines, if I just give you a quick example about the supply chain, if we look at the supply chain, how we can reduce emission from there, it would mean that businesses would need to build a comprehensive emission baseline. So they have to work out their, for different businesses, it might be different, that is fine, but they need to have some sort of comprehensive emission baselines to work with. They need to set their ambitious targets and holistic reduction targets. And this would be to reduce emission by not only just reducing your wastage and your plastic consumption, but also by revisiting your product design choices. So you have to look more deeper into how you run your business, what kind of goods you are producing, services you are offering, and reconsidering the geographic sourcing strategy, where you are getting your materials from, and so forth. So these are some things which need very careful consideration and thinking on part of businesses. Also, they need to set some other ambitious procurement standards. They need to work very closely with their suppliers to see where they are getting their material from, because it is a big supply chain when you think about it. You are not producing all your raw materials yourself. You need to get them from some other supplier. So how sustainable they are also has an impact on you achieving your targets. And like I said, there is a need for businesses to work together to align sector targets and maximize the impact and level the playing field, so that it is easier for businesses to achieve those sorts of targets. Also, they want to use like scale up the demand for greener solutions, so that it is able to lower the cost of green solutions that businesses might be interested in using. And more importantly, they need to look at and develop internal governance mechanisms and introduce emissions as a steering mechanism, and align incentives of decision makers with emission targets, so that businesses are not only thinking about returns to investors and profits they are making, but also thinking about emissions as a reality that they need to face. So in this study, as I said in the introduction, we're looking at sustainability reporting practices for SMEs. Now you might say, okay, why SMEs? Why not listed entities? Why not multinational? Well, multinationals, listed companies, they all play an important role, no doubt about that. But if you look at the percentages of these companies in the world, they're very small number of percentages. But if you look at SMEs make up over 98% of businesses in every country, not only in UK, but in every country. They are considered as the drivers for economic growth and employment in every country. And equally, they contribute quite a lot towards this carbon footprint that we are causing. So it makes sense that we not only focus on these listed and large companies, but also look at what's happening with these small companies and how we can empower them, because given they are like everywhere, they make up such a large percentage. So that's why we try to look at SMEs in this study and see what is happening, because often it is a portion of the businesses, we could say, that is often neglected, and we only focus on the large and the listed and multinationals when making policies and decisions. Having said that, if somebody is involved in Chamber of Commerce in their country or other policy making initiatives, you will see that small and medium entities are quite complex. They are quite hard to grapple with in terms of they are not really homogeneous in some sense compared to large and listed companies. So, and what is an SME in one country may not be an SME in another country. So I've just put two pictures to illustrate that, like one, a classic Indian shop, you could say, selling different types of items. That could be run by just one business or one family, or just run by one person. Whereas if you compare it to a flower shop, say, for example, here in UK, it could vary from having few different staffs to, you know, operating at a large scale. So it depends on what is the background of that business and how successful they are. So you would see that SMEs could vary from size. And when we talk about SMEs, it is such a wide concept that it covers both small, micro, medium, and large entities. So usually, even in policy making, the focus ends to be with the larger end of SMEs, the big, large private entities. And we forget often the smaller ones, which are doing the basic day-to-day running of the economy, literally. So what do we know about sustainability reporting from the literature? Obviously, before you start a new study, you have to go back to the literature. And I'm smiling because I usually tell that to my PhD students or people when we are working with research. They say, oh, this area is very interesting. Okay, fine. What does the literature has to say about this? So you have to, whether you like it or not, visit the literature to see what studies have been done and what they have said about it. So I'm not trying to give you an academic review here, so I'll just keep it very brief and nice and presentable with lovely small wordings. So what we know about SME practices or sustainability practices for SMEs from the literature is that, as you would have guessed probably, lack of resources. These are small businesses. So people will say, come on, these are small businesses, leave them alone. Why you want to torture them with sustainability reporting and so forth? Well, with these small businesses, yes, they do lack resources. That is very true. They don't have the time, they don't have the money, they don't have the infrastructure to undertake such reporting practices. But it is important because we want to move them to the next level. And this is where the world is going, literally. Now sustainability is becoming a big issue. So you can't be left out, because very soon, if you want to get funding, you would need to produce some sort of strategy of what is your sustainability reporting practices and so forth. And businesses are already doing that. Banks are already doing that. But it is more at the high level now. But come few years' time, they would be grounding it down to the smaller entities as well, saying, you know, you show us how you are sustainable, then only we will give you money for what you want to do. Then the other difficulty that they face is lack of understanding. SMEs don't have an understanding of what they need to do. They are very much focused on running their business. They're very much focused on how much profit they're making. And they don't have the time and energy to do all these other bits and bobs. Also, they don't see the benefits. So if you talk to an SME owner, they will say, I'm happy running my business here. I don't see why I should be doing all these other practices, sustainability and whatever. As long as, I can buy my inventory, sell it off, I'm happy, and make money for my family, I'm happy. So they don't really see what the benefits are here. And some of them, they think that they are too small to be bothered. They think these sustainability, climate change, global issues, leave it to the big companies, leave it to multinationals, leave it to governments. We don't want to get involved. We are too small. We can't make any change. So those are some of the perceptions that SMEs have in regards to the sustainability reporting, and lots of studies have been done in different contexts in different countries to show that. The pressure for sustainability reporting, even as you would know, this is not mandated, it's not required by law for companies to do it. It's coming from customers now, it's coming from suppliers, and is increasingly now coming from banks. So they are putting the pressure on companies to say, if you want funding, you have to show us, how you are sustainable. Or if you want funding for a project, you have to show how you are using green energy and how it is not going to have a negative impact on environment and so forth. So this is basically what the discussion in the literature is in regards to what sustainability practices are. And this is not a new topic. This has been investigated for the last 10 years. So given that, what are we trying to do? How are we going to be different if we carry out this study? So what we try to do here in this study, to take a different spin and show something different in regards to what's already been shown and done, is explore the attitudes and perspectives of SMEs towards their sustainability reporting practices, and then link it to how it can contribute to the net zero target that has been set in UK. Then to achieve this and to have a deeper understanding of what these SMEs are doing and what they should be doing, we draw on the mirroring theory. And mirroring theory generally is a theory that draws from the organizational design and product design literature. And it has been used quite a lot in economics, engineering, sorts of fields. And what this theory is, just in a nutshell, trying to do is looking at the organization's management systems and the technical architecture of the system and see how they mirror to one another. Okay, so it's a bit more complicated than that, but I'll try to just keep it simple. So what it basically means is, if you are trying to introduce or develop a new product, you look at what is your organizational management system and how you are able to fit that to the technical requirement of what you are trying to do, the new thing you are trying to do. The two has to mirror, work together, has to be aligned if you want to achieve what you want to achieve. And it may sound like, okay, so how does that work? If you are just trying to produce a good and sell it, or just buy a good and sell it, it doesn't really make much sense to you. But if you are in a type of business where you are trying to create new products, design new products, then you need to have appropriate systems that will allow you to mirror what you are trying to achieve at the end of the day. And we use that to explore whether organizational management systems and conditions of sustainability reporting practices within SMEs correspond to these technical requirements of achieving UK's net zero emissions target. So that's what we are trying to do. And we find that this theory is going to help us have a bit more deeper understanding of what's going on. So then how did we carry out this? So we basically used interviews, and we interviewed 24 businesses. 24 may sound like large or big or small number from how you look at it. But I think in the context of what we were doing, it was very appropriate, because we were conducting this study during the pandemic. So we started in August 2021, last year. And we just finished with the last few interviews last month. So at this time, these SMEs were quite stretched already with their resources and were trying to cope with these lockdown effects, had skeleton staff because people were isolating due to COVID and so forth. So it was very hard to get hold of SMEs to talk with initially. But we were very lucky given the situation, 24 agreed to talk to us. So what we did was we didn't want to be very hard and fast on the sector or the industry that we interviewed. What we did was we thought we will look at different industries to see what is the theme coming through here. And we looked at a few from construction, health and safety, food and beverage, pharmaceutical, IT and technology, health and beauty, tourism, and others ended up capturing few of manufacturing businesses. Then we looked at we asked them the size of their business. So most of them happened to be micro, large majority of them. 4 of them were small and 2 of them were medium. Sorry, micro in our definition meant that these are businesses employing less than 10 employees and have an annual turnover of under 2 million. I don't know how that will equate to a business in India. Probably you can tell me that later. But for small, we were looking at, excuse me, looking at businesses that had less than 50 employees and annual turnover under 10 million. And for medium, our definition was less than 250 employees, annual turnover under 50 million. So this was the guidelines that is used by the UK government, and we've basically used that guideline. So it's not made up by us. And then we looked at the age of the business to understand whether it was a new business or an established business. So majority of our businesses happen to be established businesses. 14 of them have been for 10 years and more, have been operating for 10 years and more. 5 to 10 were 4 years, sorry, 5 to 10 years. There was 4 businesses in that category. And then there were few new startups that have just recently started in the last 5 years. There were 6 of them. So before I go on, just to provide you a brief context about if you are conducting a study here in UK, what does this mean if we are doing interviews? It literally means that we need to first get an ethics approval from our university to ensure that we have got appropriate questions to ask. So it is reviewed and we need to prepare information statements telling us about the project, what it involves, and giving the right to the business or the participant that if they want to withdraw at any time, there is no pressure, they can do that, and so forth. So we have to follow a strict ethical guidance in regards to carrying out the interview. And obviously we ensured the business's anonymity, that we are not going to reveal their name, their business name or anything like that. So as you can see, this is all very general information without identifying which business we spoke with or which owner we spoke with. Then I just decided to provide you with a brief outline here of what this looked like. So we had 24 businesses outlined there, showing which business was which, whether they were small, micro, small, medium, and so forth, what was their age, which sector they came from. And then more importantly, since we are trying to understand whether they have been issuing sustainability report, so SR stands for sustainability report. After we had talked with them, then we went through our notes and tried to provide this summary to see which ones had produced an SR report and which ones had not. And then we also looked at which ones had an EMS in place, EMS meaning the environmental management system in place. And, you know, what they have been doing about it. We spoke about that with the businesses. After we put everything together, it was quite interesting to see what it looked like. There were 6 companies that had produced SR, sustainability reporting, and there were 3 only that have put an EMS system in place, whereas the other three had basically just produced an SR based on however it pleased them. So anyway, I will pick up on that in the next few slides. So what is the current state of SR reporting? Well, literally in a nutshell, we find that the attitude and readiness of SMEs, particularly the small and micro businesses, towards the net zero emissions are quite low. Interestingly, 50% of the businesses are not aware of the UK net zero emission law, which was passed in 2019. When we asked them, have they heard of this? They said, what are you talking about? So we had to explain what this meant. And they were very grateful that we brought this to their attention because they were not aware of this. We find that 25% produce the SR, as I showed you in the table before. 12.5% of the businesses, they have an environmental management system in place, and 12.5% had produced the sustainability report and they had the environmental management system in place. So that basically shows that there are some companies that, or some businesses that are producing the sustainability report, but they don't have any system in place. They just do it the way they want to, however it pleases them. Also, what we find there is that some of them has not been aware of any frameworks. Like there are different sustainability reporting frameworks that you can use, such as GRI guidelines or United Nations principles and so forth. But some of the companies did not know about this and they did not use any framework. They just reported however they wanted to. So also we find that micro businesses are more active or proactive in engaging in sustainability reporting than small and medium businesses. Well, I would say that is I should be careful in how I say that, because our sample was only 24, you might say, but based on the sample we got, that is what we observed. But if we were to make a more generalized statement about this, I think we need to have a bigger sample, run this with a bigger sample and see what the thinking was for micro businesses. And we find here that producing the sustainability reporting was more related to the owner's knowledge and understanding of the SR and the framework rather than the size. Because in our, if I just go back, in our sample, as I showed you, there were some medium or some small entities, but the small ones had not bothered to do either EMS or sustainability reporting. There was one medium entity in construction. They had not been interested in doing sustainability reporting. So you can see that some of the prior studies were saying that size determines whether these companies are going to be producing, but we are finding evidence little different to that now in the 21st century, or probably I should say in the 2020-2021 era, now we are having the micro businesses who are showing more active engagement with this. So yes, like I said, 70% did not know about sustainability reporting frameworks and how they could be used and what they meant and so forth. So 30% of those that did not produce the SR report, they engage in some sort of sustainable practices. So if you remember the table I showed you, there were some companies we said SR no, but some of these companies, even though they are not producing any such sustainable report, they are engaging in sustainable practices. Say, for example, I've just provided two quick quotations here. So one of the companies is saying, we've measured our carbon footprint and are tackling our emissions based on our baseline. So even though they are not producing any report, even though they don't have an EMS system in place, they are saying that this is what we are doing and we don't need such report, they basically said. Another business is saying that recycling is the core of our business and have a tangible way or certification to show that to our clients. So they are doing recycling, which they believe is a big part of what they do and their business. But again, they don't have proper structures in place or infrastructure in place. So based on on this, what we observed was, and what these businesses were telling us sort of confirmed, that there was no proper alignment of organization system to produce this net zero carbon emission that we have been talking about initially. And why I'm talking about this alignment here is because this is the mirroring theory that we started looking at, the lens we are using to look through our study. Then to provide you with some insights as to what these people were saying, as to why they are not interested in producing this SR reporting, was that, you know, one of the businesses saying at start of business, we lacked and now still lack expertise. We lack insight and understanding of the impact sustainability reporting could make to our business. It's not a priority for us considering skeleton staffing. Another business is saying, unsure how we can do this in a cost-effective and time-effective fashion. Another business is saying, we don't report on it simply due to time and resource constraints. We target our energy in actually doing the emission reduction and strategy. Others saying we lack detailed knowledge on what sustainability reporting really means, unaware how to track this activity. So you will see that some of these businesses, even though they are micro businesses, small, but they have got this desire to do something, but they don't really have the infrastructure, and they don't really know how to do it. So which basically confirms what some of the other studies were saying. Just then we ask them more questions around what do they think can help improve their sustainability performance. And as you can see from the pie chart, that majority of them were relating to the government and policymakers. They're saying the government should do more, policymakers should do more in this regard. And they should provide us more funding, they should support more training so that we are able to undertake such measures. Then the next party they thought could help improve their performance was suppliers. And the reason why they were talking about suppliers was that they want to be part of the supply chain I talked about. So if you want to do sustainable practices, you also need to have some information from your suppliers. So they think if we have more information, better collaboration from our suppliers, things will become easier for them. Also, they were talking about banks and finance companies, which is a small sector, but still they were saying if banks can approve green technology, loans for green technology, loans for, you know, making changes to put in sustainable practices, that is going to really help them. And then, of course, they were relating to general public, saying that general public and customers, they form a big component, because if a company is putting in efforts to produce sustainable products, then the customers should be ready to buy them. And if it means you are going to sell them at a slightly higher price, then still customers should support that. Otherwise, you know, the whole thing is going to go out of the window, because if nobody buys your products, why should you supply and sell them? So they were saying that we need support from customers in that regard, that will opt us to make more of our goods and services in that regard. Then the other few things they talked about was we looked into what were the issues they prioritized in their businesses. And it was quite interesting. Many of them talked about plastic pollution. So they're trying to reduce the use of plastic. Talked about food wastage. They're trying to reduce food wastage. And then trying to reduce air pollution. And then some of the social issues they talked about was women empowerment, hunger and poverty, discrimination, and so forth. So that people are thinking about these things when they are running their businesses. Then we asked them some more questions about who do they believe were the users of the SR reporting, because as this is not mandatory, so there needs to be some sort of push coming from, pressure coming from who is demanding this reporting, which is making them react in such a way. And they were saying that most of them comes from customers. They want to know how sustainable companies are before they buy from them. Suppliers, obviously, banks and finance companies, they are increasingly becoming aware of business operations and how they are trying to help the environment through their activities. So just conscious of time. Then looking at some of the discussion and conclusions. So what did we learn from all of this? Obviously, we also confirm the prior literature saying that there are challenges and difficulties that these SMEs face in regards to time, resources, and their knowledge in trying to understand how to do these things. What we find is that these businesses that we spoke to, they all talked about needing more collaboration with suppliers in the supply chain. So they thought that this was one of the key things they needed in order to put more better practices in place. Also, we find that there is a need for better alignment of organizational management system with the technical architecture to achieve these net zero emissions. At the moment, businesses are just doing what sort of pleases them. There is no proper structure, no proper thinking and process in place that will help them sustain it. Also, one of the things that we found, which is different from other studies, one of our contributions is that we find that most businesses only engage in environmental friendly practices. So they talked about reducing waste, reducing plastic, recycling, and so forth. These are more environmental friendly practices that they're doing. I mean, we are not trying to say that they shouldn't do it. This is all helping in any way. But if we want to have profound change, profound results, significant results, and we want to achieve them quickly, then there is a need for them to engage in deeper structural changes. They need to think about how they design their product. They need to think about how they developed their services. You know, what sort of products they're using within that, what sort of suppliers they're using through the supply chain, how they are dealing with the end products. So it's basically coming down like to the circular economy concepts, but they need to have these deeper structural changes if we want to see profound results. If businesses are just being environmentally friendly, of course it helps, but to achieve these targets in the next 8 years, reducing your emission by half, and then by 2050 may not be very realistic because you are not putting in substantial changes. Then we also add to the prior literature by showing that size does not really matter in terms of producing this SR. It's basically the commitment of the owners and the management, and their understanding of the topic is important, because if the owners and managers, they are willing, then they are able to rejig without having to spend lots of money and resources into it. But I think the key here is providing these managers and owners more training so they are aware of what the practices are out there and how they can go about dealing with some of these issues. And on the issue of businesses, we're saying we don't know how to track our emission. There are lots of tools that have been developed by lots of environmental companies that are available that these businesses could use if they want to really look into tracking their activities. So the just last few more slides here. So what would be the policy implications we pick out from them? So what we find after carrying out this study is that and then obviously we're going back to the Chamber of Commerce and trying to put a report to go to the Parliament, if it is successful, to see what they can do in terms of providing more training. This is what the businesses literally spoke about when we talked with them. They said, if you can do something in propagating some sort of training for us in these areas, that would be really good. So there is need for government support, obviously, and there is need for better policies, as we've said. And also there is need for active involvement of SMEs in policymaking, because when we talk with these businesses, they were basically saying that, it feels like all the decisions are made by the big players and they just tell us what to do. They don't often hear what our side of the story is. So they want more active involvement in this policymaking, and they want more support for greener technology, because they said it's sometimes difficult if you want to get a loan to put in solar panels or some other things within their business. They have to go through such a hard time getting loans because they can't show immediate benefits of that of the technology to their business, and the banks might think it's not a good business case to fund it. So they were saying we need more sort of support in that area as well. There's need for more training, obviously, so they understand the frameworks, they understand what the benefits are. And then, of course, generally, they need more infrastructure. So as we've been saying about putting in electric cars from 2030, of course, yes, we can do that. Everybody will be willing, and people are willing to buy electric cars. But I think the issue is what is the availability of electric chargers? Because if you are going long distance, then if you can't, sustain your car with how much you have charged to drive 6 hours, then what's the point? You can't go halfway and then get stuck, and you need, some sort of rescue service to get you out of it. So I think this is a current debate going on generally here. And I think just extending this finding to the audience I have now from India, literally, I guess you guys will be facing the same challenges as you look into implementing the 2017 net